Candlestick analysis allows an investor to see what's going on in investor sentiment right now. If you look at the longer term charts, look what the Dow has done after this long run up. For the last 18 months, it moves sideways. Not necessarily a non-profitable sideways, because when you're using candlestick analysis, you can see when they're selling, you can see when they're buying, you can see when they're selling, you can see when they're buying, so you can always make money on the smaller trends. However, this breakout right here tells us there's a whole new dynamic, that this consolidation that moved sideways now has a different investor perspective. A candlestick analysis sees that there's kind of a J-hook pattern that held up above the T-line, and the J-hook pattern occurred where? Right at the breakout level of the last 18 months, which told us that if this J-hook pattern was in progress, that probably wave 1 and wave 3 are going to be approximately the same, indicating that there was buying force going up through the level that everybody would suspect or would anticipate might be a resistance level. But the J-hook pattern told us that that resistance level was not going to occur anymore, that if wave 3 was the same as wave 1, we're now in new high territory, and that new wave could be the same magnitude as what we saw prior to the 18-month consolidation. The same analysis can be applied to individual charts like Amazon, that did a J-hook pattern, wave 1, wave 2, and if wave 3 was the same magnitude as wave 1, it pretty much told us that there was going to be a breakout of the recent high, putting us into much higher territory. Now, the advantage of candlestick analysis is that if you get to a resistance level, you can see the nature of each candle. In this case, in Amazon, they broke right through. They weren't concerned about this resistance level anymore, telling us wave 3 was still in progress. That same analysis can be applied to patterns such as the J-hook, or even a more defined J-hook, the bobble pattern. We can see where the evening star signal occurred right here on a resistance level, the 200-day moving average. We could also see that they couldn't close below the T-line, telling us if they opened positive on this day or traded positive, you had a bobble breakout, which is basically a defined J-hook pattern. If you took out the 200-day moving average, you'd still have a J-hook pattern in progress. Once again, being able to identify exactly what's happening in investor sentiment at specific technical levels allows investors to get a much more accurate read on what type of pattern setup is about to occur. Identifying the patterns with candlestick analysis is merely looking at the graphic depiction of what's going on in investor sentiment. Our recommendation today on KPTI was based upon a strong breakout, a pullback right to the T-line, and it did a bullish engulfing signal. Today, it was bought on positive trading based on it was coming back up through the 200, off the T-line, with stochastics curling back up, indicating that we have a wave 1, a wave 2, wave 3 being the same magnitude as wave 1, gives you a high probability of a target up in this range. Again, we're looking at situations where the signals are being illustrated as where the investor sentiment is coming in, and when it occurs on a technical level, in this case, the T-line, and up through a resistance level that everybody saw was kind of acting as resistance before, telling you that's not acting as resistance anymore. The force of wave 1, followed by the consolidation, provides wave 3, which is the continuation of wave 1. This basically puts an investor in high probability trade setups constantly, knowing what investor sentiment does as far as the patterns. That'll be it. We'll see you in the chat rooms.